Hello, this is Mike Youngman, Chief Investment Officer for Ankerstar Wealth, giving you a week ending June 7th update. Today we are going to cover inflation, Spotify, which can be used as a hedge against inflation, what the market did this week, and one of the Ankerstar core values. But before I get started, I want to remind you that this is a financial education presentation. You must do your own due diligence on anything that you hear. More information, disclaimer information is on ankerstarwealth.com, and the opinions expressed are mine and mine alone. So let's talk about inflation. But first we'll say, sometimes we need to incentivize our kids to do chores. So what I think I'm going to use, if you look at your screen here, I'm going to give my kids a $100 trillion bill from the Bank of Zimbabwe. And that's just a great big number. How much is that worth? It's worth absolutely nothing due to hyperinflation. So if you ever think the United States has really bad inflation, and sometimes we have, certainly we don't like that inflation, but a $100 trillion bill that's worthless, that's inflation. So let me get into what is inflation. And there's a couple different types. The one that you're probably most familiar with that you've heard lately in the last, let's say, 3 to 4 years is what's called demand pull inflation. And that means there's too many dollars chasing too few goods. I'll give you two examples of this. One is I bought a laptop 3-4 years ago, had a nice NVIDIA chip in it. My son told me, he's like, wow, 6 months later, he's like, you could sell that laptop for more than you bought it for. And I was like, what? It's like a used laptop. And it's because so many dollars were chasing trying to buy those chips, and there was a supply shortage. So did I sell it? No, it's not worth selling to make a couple $100. The other type of inflation are actually, also you can remember when you had a chance to buy used cars a couple years ago and they were turning around and being sold for more than you bought them for. Same thing. Too many dollars chasing too few goods. The other type of inflation is called cost push. And that means the underlying components, usually labor is the biggest one, and raw materials go up in price, and therefore, let's just say people want to get paid. And a good example of this that I'm going to cover next is Spotify. Hey, the musical artists that put out that content, they want to get paid, and they want to get paid more. They're allowed to want that. And therefore, Spotify must pass those costs on to their subscribers. So a little more on inflation. One of the goals that we hear is the Fed targets a 2% inflation rate. And you may say, well, why target any inflation? But by having some inflation, there are some benefits to it. The key is it's a very small, moderate amount. Part of this is, none of us ever want to take a pay cut. But with inflation, we're kind of forced to. The prices went up. Even if we get paid the same or a little bit more, we're kind of taking a pay cut, which is not fun. Let me show you this graph, and this will show you since 2021, inflation was actually down under 2%, and we saw this big spike that happened in 2022. And that's where everything was going crazy. You were seeing all kinds of memes about inflation of groceries, cars, everything. And stock market did not do well. The bond market did not do well. Inflation is not good for us. It's certainly nothing more than a very low inflation amount. But let me go to the, and lately it is down to in the mid threes. It's still not hitting the Fed targets of 2, but it's getting close. Let's go to Spotify, because this came out this week, and this is where inflation, you may have felt it. I felt it. My family has the family subscription. They raised the rate from $16.99 to $19.99. We are frequent users of Spotify. We will be paying that extra $3 per month. There you go. You may have got that email as well. But like, how can you hedge against inflation? Like, how could you take advantage of this? Take a look at Spotify's chart here. This has went up steadily in 2024. If you're an owner of the company as a stockholder, therefore you can kind of hedge against inflation. And there's lots of stocks that are similar to this. In fact, I'm going to show you what Y charts lists as the 7 best asset classes to hedge against inflation. So they, ex-US, non-US stock companies, maybe some there, but don't buy Zimbabwe stock. Defensive stocks, in this case, Spotify is a defensive stock. Bonds, treasury, different treasury bonds, protected tips, foreign currencies. Once again, not in most people's expertise buying foreign currencies. Commodities, and this is where you've heard gold, silver, precious metals. In the past, this has been okay, but when you look at the long-term returns, gold typically doesn't return that well, except in a few times. Real estate, and that means owning real estate as far as like a REIT, but also your house. And that's probably one of the best ways to hedge against inflation, because guess what? As inflation goes up, the value of your house does. Of course, you don't recognize that value until you actually sell it. And the last is, I'll just say Bitcoin. It can be a hedge against inflation. I wouldn't certainly list all cryptocurrencies. For the week in review, we had a couple jobs reports come out Wednesday and Friday, but overall, markets hitting all-time highs. This is the S&P 500. You can see the spike up on Wednesday, but pretty much flat after that. Here's the NASDAQ, same thing. Not going to spend much time on this. And then the last thing is I want to hit the Ankerstar core value of efficiency, that we want to work with you and your other professionals as far as accountants, estate attorneys, and make sure that your wealth plan is laid out and maximizing your life by maximizing your wealth. So we have a long-term stable team that is growing, so it's getting bigger. So with that, I will close. I hope you have a great rest of the weekend and week. Thank you. Bye.